Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action on Wall Street for January 14th, 2026. It's been a wild day with mixed signals across the board, plenty of economic chatter, and some big moves in individual stocks. So let's break it down and see what it means for us as long-term investors while keeping an eye on the short-term waves. Stick with me for the next 10 minutes as we unpack the key trends and opportunities. First up, let's talk about the major indexes and how they're setting the tone. It was a bit of a rough day for most of the market. The S&P 500 slipped by about 0.5%, closing in the red after pulling back from recent highs. The Nasdaq took a harder hit, down a full percent, showing some pressure on tech-heavy names. Meanwhile, the Dow Jones managed to keep losses minimal, down just a fraction of a percent. On the flip side, the Russell 2000, which tracks smaller companies, actually bucked the trend with a nice gain of around 0.7%. And for those watching volatility, the VIX spiked nearly 5%, signaling a bit of nervousness creeping in. For us long-term folks, these daily dips aren't a panic button, but they do remind us to stay vigilant about broader economic signals. Speaking of economic signals, there's a lot of buzz around inflation and Fed policy today. Inflation data came in softer than expected, with wholesale prices rising just a tad in November, which is a sigh of relief for many. Retail sales also beat forecasts, showing that the American consumer is still spending strong, especially heading into the holiday season. But not everyone's convinced the Fed will cut rates anytime soon. Minneapolis Fed President Neil Kashkari noted the economy's strength might complicate the case for rate cuts, and other Fed voices are echoing a cautious tone. Plus, the Fed's Beige Book highlighted rising cost pressures from tariffs across districts, which could keep inflation sticky. As long-term investors, we've got to weigh this. Cooling inflation is great for valuations, but persistent pressures or a hawkish Fed could cap market upside in the near term. Now, let's zoom in on some of the day's big winners among large-cap stocks. Energy and materials names were stealing the show. ConocoPhillips jumped over 4%, riding the wave of strength in the energy sector. Southern Copper also shone with a solid gain of more than 3%, reflecting bullish sentiment in commodities. And check out Infosys, up over 10%, a standout in tech despite the sector's broader weakness. For us looking at the long game, these moves highlight pockets of opportunity in cyclical sectors if economic growth holds up. On the flip side, there were some notable losers dragging down parts of the market. Broadcom slipped more than 4%, showing that not all tech names are immune to today's pressure. Wells Fargo also took a hit, down over 4% after its latest earnings report didn't quite impress. And Trip.com Group saw a massive drop of over 17%, rattled by news of a Chinese antitrust probe. Short-term, these pullbacks might spook some traders, but for us long-term investors, they could be moments to watch for potential entry points if fundamentals remain solid. Looking at the most active stocks by volume, Nvidia was in the spotlight as always, though it edged down a bit today. Bank of America also saw heavy trading, slipping nearly 4% amid the broader financial sector weakness. Intel, however, managed a nice 3% pop, showing some resilience. These high-volume names often reflect where the market's attention is. AI and banking are clearly on everyone's radar right now. When it comes to the market movers shaping the narrative, the usual suspects are front and center. Apple and Amazon both saw slight declines, while Tesla dipped nearly 2%. Still a name to watch with its ongoing innovations. Netflix also pulled back a couple of percentage points amid chatter about potential deals. These giants often set the tone for their sectors, so even small moves can signal bigger trends for us to monitor over the long haul. Earnings season is heating up, and this week's calendar is packed with heavy hitters, especially in the financial space. Today, we saw results from big names like Bank of America and Citigroup, though both faced some revenue shortfalls and saw their shares slide. Looking ahead, Goldman Sachs and Morgan Stanley are set to report soon, and expectations are high for insights into investment banking trends. PNC Financial and Regions Financial are also on deck, offering a peek into regional banking health. For us long-term investors, these reports aren't just about quarterly numbers. They're a window into consumer strength and economic direction.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Companies are saying about the road ahead. It's invaluable for building your strategy. Over the past week, some large-cap stocks have posted impressive gains. Expand Energy Corporation skyrocketed over 447%, an outlier for sure, but a reminder of the volatility in energy plays. D.R. Horton and Alibaba also had strong weeks, up over 14% and 16% respectively, pointing to strength in housing and e-commerce. These short-term surges can be tempting, but as long-term players, we need to dig into whether these gains are backed by sustainable growth. On the other end, some large caps took a beating over the last week. Regencell Bioscience plummeted nearly 48%, a stark reminder of the risks in biotech. Atlassian and Alnylam Pharmaceuticals also saw double-digit drops, reflecting sector-specific challenges. These declines might signal short-term pain, but they could also unearth value if the underlying businesses are sound. Let's touch on sector performance over the past week. Energy led the pack with a robust gain of over 7%, followed by industrials at nearly 7.5%. Consumer cyclical and basic materials also showed strength, up around 4% and 6.5% respectively. These moves suggest a rotation into more economically sensitive areas, which could be a good sign for growth if the economy stays resilient. Conversely, tech was the laggard this week, down about 0.75%. Financial services also struggled, off by 0.5%, likely tied to mixed earnings reactions. Communication services and consumer defensive sectors weren't far behind in the red. For us, this could mean keeping an eye on whether tech's pullback is a buying opportunity or a sign of bigger headwinds. Wrapping up the market action, the S&P 500's slight retreat today doesn't erase its longer-term uptrend as it hovers near record territory. It's a reminder that while short-term volatility, like today's dip, grabs headlines, our focus as long-term investors should be on the bigger picture. Are we seeing real economic cracks or just temporary noise? Right now, it looks like the latter, but let's stay sharp. Similarly, the Nasdaq's 1% drop stings a bit more for growth-focused investors, given its tech weighting. But remember, tech has been a powerhouse for years, and periodic corrections can reset valuations to more attractive levels. Keep your watch list handy for names that might get oversold in this environment.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.